Hello everyone. Thanks to Peter and the RavenPack team for inviting me today. Thanks Dow Jones also for the organization and the invitation. So my name is Nicolas Boitout. I've got a PhD in financial econometrics. My initial specialty is time series modeling. And I spent, after this PhD, almost 10 years trading FX, initially doing some pure price action models, and then including progressively cross-asset signals. I mean, trading FX based on fixed income signals, and then including more and more event trading in this package. I had the opportunity to work as a fund manager and then as a systematic trader. So I've been both on the discretionary trading side and then on the systematic trading side. So I think it gave me a unique opportunity to watch what's really happening and what's the drivers on the market. After this experience on financial markets, I decided to start a company whose name is MarketScience, based on the following hypothesis. When you ask someone about what's driving the market today, it's very difficult to answer. What's the drivers of the market today, of a market, even a market that you know yourself and you're trading on a regular basis, you don't even know. It's very difficult. And most of the time, what people reply, if you do like a small poll, they say, well, they just reply what they read in the news. So that's quite interesting. Because then I look at the whole project of MarketScience was to say, okay, but how do the people who are in newsroom knows about what's driving the market? Are they traders themselves? No. They maybe are polling few traders, but besides that, they don't really know. So I took the challenge. I say, okay, I'm going to put what the press overall is saying about one market drivers, and on parallel, I will do some matching automatically with events, with a list of events, and look if it match. I did an app with Bloomberg. It went live in March 2015, the beta version. We had some good feedback, but we realized that it was not going to be satisfying as a business model with Bloomberg. Bloomberg was very picky about how we handle the data. It was very difficult to handle. So I dropped the idea, and we stayed as a research group, and we do bespoke research. So within this app, we had the opportunity to develop a web crawler. This crawler was parsing freely available website and getting some specific articles about, okay, today, for instance, the CAC 40 is going up because of Chinese data. Really? So we took that, we were extracting that automatically with simple techniques, and then creating a small summary with all this type of sentence that were picking up on financial on a website, and on parallel we were matching that. Okay, and then when we got live, a lot of people told us, but look, it's what we are interested in is not like we are interested in some specific schedule event. When central bankers are talking. Oh yeah, okay. So that's a different topic. And we started looking at that, looking at speeches, looking at press conferences, and to see how they were impacting markets. And the crazy thing is that, well, today we have been talking about single stocks equities, but most of the global macro assets, they are being driven almost exclusively by central banks. And you can explain the price action over the last 8 or we are 2015, so since the crisis, by few decisions from central bankers. We don't need to do a lot of data mining in order to get that. If you follow the decision, few speeches, you get the picture right. So actually, there are a lot of things that we can do. And the thing which has been very new, I think, in the field is that central banker, it's not their decision to increase or mostly put the interest rate lower that is driving the market. It's their own words. So maybe we can do something in terms of natural language processing to get the flavor, to understand where they want the market to move. Actually, if you look carefully, I'm sure everyone remember, if you look at what the small words, because it's not like a huge data set, but if you look at what the central bankers are saying, it's only few words. Everyone has in mind the whatever it takes to save the euro that Mario Draghi said. I don't know if you remember, but the Fed has been talking a very long time in the Fed minutes, in their speeches about being patient. Just that. Can we, so the question is, in terms of natural processing, it's very difficult to capture that because it's just one word. And this one word was the one which was the focus of the market. And, well, basically, if you knew if this word was present in let's say, in a report or in the minutes, it was okay. You had the picture right. So what I'm going to talk tonight is, okay, maybe we can do something automatically to try to extract these small words. Not the whole not analyze the whole story, the whole minutes or the whole publication that central banker can do. This we can do it on a second step. But for the time being, what I want to do is that I want to be like an ECB expert, being like Brian Blackstone from the Wall Street Journal, and capture what is important in what they are saying. Okay? So this is quite challenging, but initially as a project. But you will see that the first step is quite easy. So that's which one? Does it work? No? I think it doesn't. Oh, sorry. Okay. So recently, you can split central bankers' words in two things. The first was to say, okay, we're going to keep interest rate low for a long time, whatever it takes. I use this expression in purpose. And this is what I call constructive ambiguity. No, forward guidance, sorry. And sometimes they can say, okay, we're going to be data-driven. And knowing that is very important because you will know if after this event, after the press conference or the talk that these central bankers will have, you will know that if the market will be concentrated on the impact on some new data or they won't. Because, I mean, everyone on the market get the picture right. They know if the central bank is going to hike in the next 6 months or even more. If you know that they won't move, what's the point looking at macro data? What's the point? What's the point looking at? You know that whatever happens, they will keep interest rate low, and it's the same for quantitative easing. It's the same for a lot of policy like that. Okay, so how can we capture that? I'm definitely not good with this button. Okay. So just, I've been a bit long on the introduction, but just to remember that, okay, I'm going to focus on Mario Draghi. And as you see, Mario Draghi, since the moment when he took the lead at the European central banks, he has been very active and for good purpose. He cut interest rates 7 times since November 2011. The ECB has been supporting government bonds in 2012 after the whatever it takes. So that they cut government bond spreads between Germany, essentially, and the rest of Europe. They've been introducing the LTRO, which has been providing liquidity to banks. They've been progressively moved towards some quantitative easing, first of all by buying covered bond, and then moving recently, since January 2015, on a full-scale quantitative easing. Okay? And if you take this date, and you map that on, for instance, the S&P 500, not for the S&P 500, but for the euro dollar, or you will see that it has been impacting a lot the market. So essentially, by looking at that, I can get the picture right. Oh, I know. Okay, I was on the wrong button. Okay, a bit of technicalities now. If you want to identify when the market is really moving for some reason that we can analyze, looking at volatility is not enough. For instance, if I tell you today that the market moved up by 0.5% because of Chinese data, it's very unlikely. Why? Because it's like small movements. We can't interpret this movement. We don't know why at some point some buyers are buying and some sellers are selling. It's very difficult to understand. The only moment that we can analyze is when everyone is doing the same action at the same time, because we can reasonably expect that they have a common denominator. there is some new econometric tool in order to do that. They are called jump tests. Everyone knows about jumps because they were, this tiny last component in a stochastic volatility process. But now we have like empirical method to detect them rigorously. Let me emphasize just the idea is that people have been able to demonstrate that actually if you take the volatility is usually computed as the square of the returns. If you take consecutive returns, you can show that, and you do the computation this way, you can show that actually this is very close to being a volatility matrix. But the thing is that when you do that, you remove the jumps. So it's essentially a jump-free volatility measure. So if you combine a standard volatility matrix with respect to this, what is being called bipolar variation, you can show that actually you have a measure of jumps. You have a measure of the moment when the market is moving and it's not volatility. It's not something that you can't understand. This is something where the market is moving and everyone took the same action at the same time. So this is, according to my hypothesis, something that we can interpret. This is something that we use in event trading. So there are some technicalities about getting it right. It's quite difficult. In particular, you need to remove the periodicity. The market is moving. The volatility of the market is in a way predictable. You know that there is always some more volatility at the opening of the market, at the close of the market, at some specific moment. So we need to filter these seasonalities to get the picture right. But then we have a strong measure. Strong and an efficient measure to capture when the market is moving that is not the standard moment, the standard way. Why do I do that? Because I want to compute minute after minute on the euro-dollar how it is reacting when Mr. Draghi, to make it short, is talking. Let me come back to, I think I skip this slide. Where is it? Up. Yeah. So Mr. Draghi's intervention is split in, if you don't know about that, is split in two events. The first thing is the announcement about the interest rate, which is coming at 12:45 European time. And at 1:30, he's starting to do this speech. His speech is a very interesting format. It's coming during 1 hour, usually. For the first 15 minutes, he's talking. It's like something that is prepared. It's like a text, roughly 1,500 words. And then there are unprepared open questions from accredited journalists, people who are experts. That's very interesting because we can track minute after minute which word or which sentence, let's say, which passage has moved the market. And by using the technique that I just described, the jump, during that moment, we can try to see, okay, that's the passage which moved the market. Okay? Let me come back. Okay. So the ECB is providing two things. It's providing an official transcript, which is available a bit late. So first of all, there is this press conference, and then after a few minutes when it's over, they release on the website this ECB official transcript. And in the media, we can talk about Bloomberg, Financial Times, and obviously Dow Jones, so either on the Wall Street Journal or MarketWatch, is available a live transcript that is followed by a lot of traders. Why? Because during that part, in this particular live articles, which are updated continuously, we have minutes after minutes, few of the sentence that Mr. Draghi mentioned, few of the words that Mr. Draghi mentioned. Usually it's enriched with a lot of comments, either from the Wall Street Journal journalist or from analysts outside of the journal. So we have a lot of noise, but we have the moment when he said each particular word. So these are the ingredients. So I have on one side the euro-dollar. We know we can compute in a very serious way when the euro-dollar is moving, and we can interpret that because it's a jump, it's a movement which is sudden, usually quite large and immediate. And on the other side, we have two ingredients. We have the ECB official transcript, and which are coming with some delay, and we have the live transcript from media. These live transcripts are coming with some timestamp, while the ECB official transcript is coming like that. It's well edited, but the problem is that we don't know anything about the timing, and this is precisely what I'm looking for. So in order to complete the picture, I'm going to talk about information retrieval, which is a subject, surprisingly, that is not very often talked in sentiment news analytics. I don't know why, because this is an essential tool. We spend a lot of time trying to capture the sentiment in one article, but maybe the question would be, okay, if I have a news feed, the most important question is to find what was the information that is important. So I need to search in the whole news feed in order to get this precise information. So I'm going to sketch here the basic algo of what is it's a bit ambitious to say search engine, just search technology between media live transcript and the official ECB transcript. I mentioned that the ECB live official transcript is quite well edited. We have a text which is available on the web with where we see well, we don't have the timestamp, but we have it's properly edited. We have tags which are we have paragraphs which are well tagged. We have the questions which are clearly mentioned as such, and we can generate documents with every passage, with every paragraph, so that we can search in each of them which one could be the market driver. Then switching to the media transcript. The idea is that we need to formulate a query repeatedly. What we do is that we search within this live transcript, which once again include Draghi's words of sentences about what he is saying, but it's not like a formal report. And we have comments which are probably valuable, but at that time I'm not interested in them. So what I want is that just extract what Mr. Draghi is saying. So it can be between quotes. It can be in sentence like Mr. Draghi is explaining that, and so on. So I want to extract that, keep the words, and search for them within the official ECB transcript. So what I did something very simple at that time. For the time being, I took the words between quotes. I use a stemmer, so an algorithm to make each word much simpler. I took Draghi with a list of verbs, and I took all the acronyms. And this gives me a short list of words that I will search in the ECB live transcript. So two types of queries. I use a standard ranking longest, shortest algo, so that I say, okay, this word is the one that I'm going to search for in the query, and I got so I've got my two queries already. Then we search in the we do the search in the ECB transcript, and we minimize the distance so that we know which passage is the most likely to correspond to the time at which a media has made a special comment. And then we generate a new output with the timestamp. So the ECB with the timestamp. So let me show you a few results. So I'm going to be short of time, but the matching is a tricky problematic. The essential case, the one that everyone understands, is that we have an event coming to the market, and the market responds immediately. So we capture that by this jump test, and we can match it. Let's say if it happens like 2 minutes before, it has been released 2 minutes before, it's reasonable to think that the market is reacting according to this news. Yeah, 5 minutes, merci. But in the case when we have multiple macro events, it becomes more difficult because we can have a movement. It's the orange candle that can be matched with an event, let's say 1 minute before or already 5 minutes before. So which one is going to be the main driver? So it's difficult to understand. This happens very rarely in terms of macroeconomic announcement, for instance. But this happens with Mario Draghi, because if you can think Mario Draghi press conference as a scheduled event, and within which we can have like some unscheduled event, some moment when he's going to surprise the market by being more hawkish, more dovish, saying few words that will trigger some market reaction. So this second case is very important. The last case is the case of what we call private information, when the market, an information is coming to the market, but it takes some time to diffuse. But ultimately, we know that we're going to have a jump, because we know that in this special case, when the market is moving exponentially like that, if we use some algo to detect what is the likely starting time, we can match the jump, which is quite late, with an information which is coming earlier. Okay, that's quite technical, but you see that once we have that, we enter into some interesting combination between news or news feed and market reaction. So I applied the jump test that I described on 1 minute data on the euro-dollar, and you see that all the jumps concentrate either at the moment of the announcement on the rates. That's not surprising, and between the 1 or 2, 3 minutes after the first when the Q&A section starts. So what it means that essentially the market is reacting immediately about the first 2 questions. So the people, the journalist who has the opportunity to ask a question in the first 2 minutes, they will move the market. Or Mr. Draghi is probably responding. Usually the response are a bit longer than usual, and he is moving the market. Okay, so then I did a screenshot about, so this is the ECB official transcript, on which I put on different colors. So I'm looking for, in my queries, for few long words which I extracted from the media, and the passage is highlighted in green. And then I put the timestamp at the end of the sentence, at the end of the passage, sorry, the moment of the... what's interesting is that I'm going to show you a few examples. So this one is the 3rd of September. So we had on the table, we had the list of jumps that we computed. So you see that we can have consecutive jumps, which come back to my question. Okay, we can have consecutive jumps. So which one, at which sentence moved the market, knowing that the market has been moving in a very fast manner for 3 minutes. So that's a challenge. But if I go a bit further, you see that the algo has been able to highlight. I put it in a bigger font, the if necessary. So when basically the official ECB official transcript is about 7,000 words, and if I apply this rule, jump on one side on the euro-dollar, and simple search mixing media live transcript and the ECB official transcript, I know that there are roughly 200 words, and among them we have the if necessary, that the media, the expert, will say this is important. Let me jump to the last. I took another example. So same principle. So this one was in 2014, May the 8th. So you see the price action on the euro-dollar is quite tricky. It started by moving up and jump on the downside afterwards. So we had a lot of jumps, initially up and then down. This one is quite powerful. So 22.42. It's very, very important in terms of 1 minute movement. It's probably among the biggest in the whole history that we have been looking at. So this one at 12.53. Let's look at that. So 12.53 so the sentence that we can find is, so at the end of this discussion, I would say that the governing council is comfortable with acting next time. Well, that's good news. That's not a good news, but that's an important news. And I did a basic search into Dow Jones, and clearly all the experts were saying that after the ECB press conference, they were saying that the sentence which is important, that's the one. So I think, and I'm going to conclude on that, well, this is very preliminary, I can't deny, but I think we have something, knowing that central banks are moving global assets, maybe we have something here where we can match, because of the format of the press conference, we have live transcript, ECB official transcript. We can match and say, okay, this moment was important because the market reacted. We can do that automatically, so it opens the door to, well, some refinement, obviously. So this is, I think, interesting because, moreover, this format, speech, unprepared, very important question. So the journalist asks the question that everyone has in mind. So this moment allows us to develop some algos where we extract automatically what's important. I would say that what I did shall be done by the ECB. The ECB is providing some live transcript through Twitter, but they don't do the whole speech. They just do they pick few words. But I don't want picking. I want the full transcript available live with some timestamp. If we were doing that, probably that in terms of natural language processing, we could develop some interesting process regarding central banks communication. Thanks a lot.
We have time for a few questions.
How do you get around the problem that if you take the ECB press conference, for example, some people are trading it live from the press conference, some people are trading it live from, say, the Dow Jones, the Bloomberg, Reuters feed, and some people are trading it live from a direct satellite feed. So all three will convey, agree your word, at completely separate times.
Yeah, absolutely. There can be some mismatch, and we can even within a source, because we usually have, let's say, one journalist, accredited journalist inside the ECB press conference, and two in the newsroom, and they are all reporting at the same time. So when they press the button enter, we can have some problem in terms of timestamp. We can have things that I can have, let's say, I can find a passage which is matching with the timestamp, and then when I search further, I can have something which is going. So there is a bit of uncertainty. And let me come back to, I dropped this probably interesting chart, which is, let's be honest, a weakness about the method, is that let's imagine that Mr. Draghi and all the journalists are speaking in a constant speed. What they do, so roughly we have 7,000 something words during the whole press conference, including the questions. So it means that we are at a speed of 100 words per minute. So that's what I put on the top chart, is the constant speed line versus the immediate tagging algo that I developed. And what you see is that they are matching to each other. If the green dotted line is the spread. So you see that we evolve more or less around 100 words. So if I take the linear, if I say, okay, Mr. Draghi is speaking in a constant manner, we would have the orange line, and the algo is providing something that is very close, actually. So there are some room where we can improve the fine tuning, but and this is a result that I didn't show. But if you look at the Financial Times, let's say the Wall Street Journal, Market Watch, and Bloomberg, basically we have the same result. So that's very consistent. I hope this answers your question. So this is, I'm comfortable with that. What I'm a bit less comfortable is that I'm not able to really outperform a linear constant speed for the speech of Mr. Draghi. Well, there's some room on how we can improve the metrics, but that's the beginning.
Maybe 2.5 questions. Sorry, thanks. Can I ask sort of 2 questions on this? For one, if I understand you correctly, you use Eurodollars for a ECB speech.
Say again? I use what?
If you use dollars for an ECB speech, arguably one might say that Euribor or sterling is more relevant for this. And the second thing that I would like to ask, which particular asset are you looking at? Is it the first, second outright, or are you looking deeper in the curve? Because depending on what he says, it might impact
so when I say Eurodollar
is
the exchange rate. So when I say, let's go back to the chart. So I'm looking at the Eurodollar over the whole period. That's so I highlighted on the chart the moment when the ECB cut rates. So this is really euro dollar. I'm not looking at future euro dollar futures. And to your first question, actually I'm looking at the euro dollar because this is a very liquid asset. And if I want to get the flavor about euro drivers, I could go at looking at the euro sterling or euro yen, whatever. The idea was to show that actually by combining on one side the market, on the other side some news and matching, maybe I could be as an ECB expert, meaning extracting automatically. Let me go back to this example. Extracting automatically the few words which matter. Because once again, this is what I'm planning to track in the media, how they cover these particular words. This one is comfortable with acting in June. Well, let's do a search. It's very, very easy. For that day, it has been used in the media very, very often afterwards. So everyone got it right. But as an algo, it's very difficult to say. I mean, using the standard sentiment metrics.